Good afternoon, and welcome to our conversation this afternoon, hosted by Gunster. We will be talking about Florida 21 reflections on the new state laws and federal policies after the first 100 days. I am Ron Brisé, and I have the pleasure and privilege of chairing our government affairs law and lobbying group with our firm, Gunster. For your information, we are recording this webinar. You can view a replay on demand on the Gunster website. You can find additional timely information and resources there as well. Go to gunster.com. We trust that if you're watching, that you will enjoy it, but you will also, we encourage you to send information to your friends and family so that they can also view it at a later time. We encourage you to submit any questions you have using the Q&A feature on your screen. Questions will be sorted, read aloud anonymously, and answered by the most appropriate presenter. Today, our experienced team will analyze the 2021 Florida legislative session. We will share some key takeaways and sort of take a sneak peek into what we expect the senator to sign and veto. Then Senator LeMieux will provide an overview of the first 100 days of the President Biden administration. So first, I would like to introduce you to my colleagues and presenters today. Gunster's government affairs team is comprised of 8 Tallahassee-based talented consultants and attorneys. Today, we have 3 of them to share with us in this session wrap-up. First, we have Joanna Bonfanti. She is a 7th-generation Floridian from the Panhandle. She has deep roots in Florida, and I like to say that she sort of grew up in the process literally. Her father, Senator Charlie Cleary, served for 10 years in the Florida Senate from 1996 to 2006. During this time, Joanna received firsthand experience in political campaigning, fundraising, public policy, and advocacy, watching her father, Senator Cleary, represent his constituents in Tallahassee and serve in many leadership capacity, including as Senate Pro Tem for the Senate. Joanna's passion for Florida politics and public policy has led her to her career in lobbying. She has over 15 years of experience representing clients before the legislature and executive agencies. Her clients come from a variety of industries, such as energy, transportation, water and wastewater, regulated industries, nonprofit corporations, environmental, healthcare, and education. Joanna strives to build relationships with legislators and staff to provide personal and consistent client communications. She helps clients develop a full legislative strategy, from drafting legislation, finding sponsors, passage of legislation, and even sometimes killing harmful legislation or amendments. She can also advise on incorporating public affairs strategies to achieve success. So we will be hearing from Joanna shortly. Next, we have Kevin Cleary, also a native of Florida, and more particularly, the capital city of Florida, Tallahassee. Kevin is skilled in navigating the inner workings of state government and local government. Prior to joining our team at Gunster, Kevin developed more than a decade of legislative, executive, and political experience. Kevin served on as the Legislative Affairs Director at the Department of Environmental Protection. While advocating for the governor's top legislative priorities, Kevin developed an intimate understanding of environmental policy and regulatory issues important to businesses throughout Florida. Prior to his service at the department, Kevin represented business clients and local governmental entities before Florida's executive and legislative branches on issues related to agriculture, infrastructure, affordable housing, regulated industries, education, information technology, among others. Kevin's knowledge of the executive branch is complemented with his years of legislative experience while working in the Florida House of Representatives. In addition to his governmental affairs experience, Kevin's previously served as an advisor to political and issue advocacy campaigns within every level of Florida government, and often offers a keen understanding of Florida's dynamic political climate. Kevin's unique experience in advocacy and strategic communication allows him to help clients focus on what matters most to their business. With a strong belief in the power of partnerships, Kevin is committed to building long-lasting relationships for his clients with crucial stakeholders and leaders in government and across the private sector. So you will be hearing from Kevin shortly as well. Sha'Ron James brings extensive experience in both the public and private sectors, insurance law and regulatory matters. Sha'Ron practices at the intersection of government affairs and advocacy, insurance law and regulation and policy development, and most importantly, execution. She represents domestic and international insurance companies and insurance-related entities throughout Florida before the Florida Legislature, the Office of Insurance Regulation, and other state agencies. Sha'Ron is proud to have served 3 state of Florida CFOs throughout her many years in public service, including Alex Sink, Jeff Atwater, and Jimmy Petronis. In the role of insurance consumer advocate, Sha'Ron has represented the general public and insurance customers before the legislature, the Department of Financial Services, and the Office of Insurance Regulation, and the Agency for Healthcare Administration in a myriad of insurance, regulatory, and policy matters. Sha'Ron was appointed to this role after her tenure as Director of the Division of Rehabilitation and Liquidation in the Florida Department of Financial Services, where she directed the operations of 48 complex insurance receivership estates with entrusted assets totaling over $1.4 billion. So you will hear from Sha'Ron shortly. Finally, my colleague, former Senator U.S. Senator George LeMieux, one of our litigators and chairman of Gunster. For more than 20 years, George has been the lead trial counsel in federal courts and state courts in civil and regulatory matters before juries, judges, and arbitrators. His clients include financial institutions such as Wells Fargo, TD Bank, telecom companies, AT&T, for example, healthcare providers, Cleveland Clinic, Broward Health, Memorial Healthcare, real estate developers such as RAM Realty Services, and Falcone Group. And during the course of his career, he has represented prominent individuals such as President-elect George W. Bush, Governor Bush, and a plethora of other people. He has argued cases before the U.S. Supreme Court, the Florida Supreme Court, and Florida's Intermediate Appellate Court. His practice includes defending clients in enforcement matters brought by state attorney generals, advocating for clients in administrative law proceedings, including bid protests, counseling governmental bodies on public records and public meeting requirements. He has successfully litigated disputes and intellectual property cases to verdict. His practice also includes professional liability defense. At the request of Governor-elect Ron DeSantis, George co-chaired the DeSantis-Nunez transition team in 2018. So to give us a perspective of the first 100 days at the federal level, we'll go ahead and turn it over to my colleague, Senator LeMieux.
Well, thank you so much, Ron, and it's great to be with the Gunster team today. And for all the folks who are viewing, thank you for tuning in. I'm going to do my best to give some perspective on what's happening in Washington. These are extraordinary times. America has not been through such a difficult public health crisis for 100 years since the time we've dealt with the Spanish flu. It was a crisis that ended up not just being a healthcare crisis, but also an economic crisis. Last year, in the second quarter, we lost $2 trillion in GDP, gross domestic product. The stock market fell by, I think it was 10,000 points. It was a substantial hit to our economy. And Congress and the White House reacted swiftly under the prior administration with both Democrats and Republicans working together. I say that as a framework because that spending framework, which we'll talk about here in a moment, is important to understand what's also being proposed and what has been enacted in the first 100 days. So in the second quarter, we lost $2 trillion of gross domestic product. The CARES Act passed in March of 2020, and that program was a $2 trillion program of funds that were sent out to Americans in all different walks of life, from direct payments to Americans of certain incomes to the Paycheck Protection Program that our own Senator Marco Rubio had a large hand in crafting, which sent payments to businesses in order to keep people employed. So the $2 trillion hole that was created in the economy was in many ways addressed by the CARES Act, but that was not the end of the governmental programs. There was another round of PPP funding that happened later last year, and that accounted for an additional $400 billion of spending. There was a Response and Relief Act that was passed by Congress in December, which was another $500 billion of spending, another combination of direct support payments and incentives to businesses and other organizations. In March of this year, during the beginning of the Biden administration, the American Rescue Plan was passed. That was a $1.9 trillion program. And that's the program that, again, sent $1,400 per person payments that provided for vaccine funding. So now, if you consider the spending, we've spent almost $5 trillion between all of these various programs for what was a $2 trillion hole. Obviously, the spending takes a while to circulate through the economy to fill up the deficit that was created last year. There are two new substantial programs that are in place that have been proposed by the Biden administration. And from a political perspective, President Biden and his team, in my view, understands that they have a very short window of time in order to pass landmark legislation. When I was in the U.S. Senate during the beginning of President Obama's term, he had majorities in the House and Senate, in fact, supermajorities, and he quickly moved to pass the Affordable Care Act and Dodd-Frank, which were substantial programs. Going all the way back to George W. Bush, in his first year in office, he passed a substantial tax cut. Donald Trump passed a substantial tax cut through Congress in his first year. After the first year, going into the fall, which we're coming up on, it gets more and more difficult for presidents to pass their initiatives. The honeymoon is over, so to speak, and people start to focus on the next congressional election, which historically has been bad for the office of the president's party. This time, it may not be so bad as the economy continues to improve. Having said that, President Biden and his team realizes that they're going to try to pass whatever they possibly can now, prior to the August recess, in order to have accomplishments that he can, hold up for the American people when Congress goes to election in a year or so, and then if he stands for re-election, which he has said that he intends to do. So the next two big plans that he is focusing on are the American Jobs Plan. This is an infrastructure plan, so it's going to address the normal type of infrastructure programs like roads and bridges and airports and railways, water grids, electric grids. expanded things that are new infrastructure programs in the 21st century, like broadband. It also addresses funding for public schools, which haven't traditionally been funded by the federal government. But the program under the heading of infrastructure is far broader than that. It has what I would consider to be more social program funding and a lot of funding for climate change. The plan attempts openly to impact what it calls racial justice issues, which have not traditionally been thought of as infrastructure. They also have a jobs plan portion of this American jobs proposal. And that proposal states that they want to create good quality jobs that pay prevailing wages. So that is probably going to have included in it a $15 minimum wage proposal for everybody in the country. Some states like Florida are moving towards a minimum wage of $15. We passed that as a constitutional amendment in our state, and it's being gradually achieved over the next few years. This would mandate it across the country. So we don't have the language of this bill yet. It's still under negotiation, but don't think of this as an infrastructure plan. Think of this as the Biden New Deal. My view is that they are looking to make this the big signature legacy project and product of this presidency. And they want to do some transformative issues on race, on social justice, and on climate. So while it's being named infrastructure and a jobs plan, it goes far beyond that. Now, where will Republicans stand on this? Remember, Republicans are in the minority in the U.S. Senate, but they're just barely in the minority. And folks like Joe Manchin, who's a Democrat, moderate Democrat from West Virginia, can really have an inordinate amount of influence on whether bills like this pass, because if he doesn't go along with the Democrats, they can't do this on a simple majority. You've been hearing about whether or not they can do this on a simple majority. Normally, it takes 60 votes in the Senate in order to overcome a filibuster, but there is a process called reconciliation, which is a budgetary process, which can be used to get a simple majority vote. That was already used once. In the arcane rules of the Senate parliamentarian has now said it can be used again one more time. So look for this American Jobs Plan to potentially be used that way on a simple majority vote. That makes Joe Manchin very powerful in deciding what gets in this program and what doesn't get in this program. Interestingly, the Republicans in the Senate do want to do infrastructure, but they want to do the more traditional infrastructure of roads, bridges, airports, railways, which you would normally think of as infrastructure. They have signaled that they would spend as much as $600 million, maybe I said million. You go to Washington, you forget that it's in billions, $600 billion. And Mitch McConnell has intimated maybe as much as $800 billion, which means to me that it probably could go to $1 trillion or higher. But they're not going to go for tax increases to pay for it. In many ways, I think they would rather see increases in taxes like gas taxes, user fees, as opposed to income tax or capital gains tax increases. So you might see an infrastructure plan that passes $600-800 billion, maybe $1 trillion with Republican bipartisan support, and they split out the rest of it. We'll have to see what tactics the White House employs. So that's something that's going to happen and be addressed here in the coming months. There's also an American Families Plan, which is another $1.8 trillion in education funding. Some of the components of that is at least 4 years of free college education, as well as direct support payments for families with children, extending tax cuts for families with children, and universal pre-K. So another big spending program. Whether or not they can get both of these done remains to be seen. Before I turn it back over to Ron, let me just mention that President Biden and his team are proposing tax increases to pay in part for these. They would not pay in total. They would continue to borrow money to pay for these. But they are looking to raise corporate income tax to 28% from the current rate of 21%. That you'll remember that we were near that 28% rate, maybe 29%. Previously, and now we're at 21. That was passed when President Trump was president, so that would be a substantial increase. There would be an increase in income rates going back to the Obama era. Right now, the top rate's 37%. They would go to 39.6%. There could be some additional increases in that based upon how much money a person makes. Capital gains taxes would also impact potentially people who make over $1 million a year, with an increase to 39.6% on that. And then based upon some other investments that people have, it could get all the way up to 43.6%. We have a thing called a 1031 exchange that's named after the IRS code, which allows you to exchange real estate and not pay capital gains on the value add that you have from the exchange. That would go away, or at least be limited to $500,000 or properties of $500,000 or less. For those who are concerned about estate taxes, right now there's a current exemption of $11.7 million in terms of what you can give away. Under the Biden proposal, that would go down to $1 million per person. So that's a large issue for folks who have considerable means. And if you haven't started your estate planning and changes that you might want to make, you need to speak to us here at Gunster, and we can get you to the right person. There also would be changes to different types of trusts, generational skipping trusts, as well as some increases on taxes concerning when someone dies and they have unrealized gains. So there's a lot more detail than that, but those are some of the proposals, which would certainly be a meaningful change in our tax laws. So we'll see what happens here. If you want to kind of evaluate this and determine whether or not you think these things are going to pass, you should be looking for something to happen before Memorial Day on at least one of these pieces of legislation. And then, the Congress doesn't really work until they're forced to. And people like to take their August vacation, whether they're doing what's called a CODEL, which is a congressional delegation trip where they go overseas, or whether they want to come back and campaign or just go on a normal vacation. So a lot of things get passed in that late July timeframe, bumping up against the August recess. So watch those 2 dates to see whether or not Congress moves on either one of these big initiatives of President Biden. And with that, I'll turn it back over to Ron. Thank you, Ron.
Thanks, George. So we're glad to see that we're starting to see audience questions. And so when it's time for that, for that segment, we'll begin with those questions that we've received so far. Just one more area, George. We recently had the census, and we had that done. And so therefore, there is going to be congressional redistricting, and what the impacts of that outcome may be. I don't know if you want to comment on that as well.
Well, thank you, Ron. We had the census, and there is going to be redistricting. Florida is going to gain 1 House seat. It was hoped that Florida would gain 2, but as the way the numbers come out, we're going to gain 1. The state legislature gets to determine where that seat goes. Would not surprise me if you see that seat somewhere around the I-4 corridor. We'll have to see. Usually there's nothing more political than drawing lines for House seats, U.S. House seats. They'll also draw the lines for House and Senate seats for the state legislature, and aspiring politicians who would like to go to Congress might be drawing themselves their own seat. Different situation in other states where you're losing a seat, because then oftentimes you'll get 2 members of Congress getting lumped into 1 seat, 2 incumbents having to run against each other. That's not likely to happen here in Florida. Interestingly, for the first time in the history of our nation, California, which has always grown in population, is losing a congressional seat. So sort of some of the demographic shift that's happening in this country. But look for Florida to gain another House seat, and New York has lost another House seat. So in my view, some of the higher tax, higher regulation states losing population, mostly to the Sun Belt, where we're seeing a big population influx. Just a real interesting point of trivia. If New York would have found 86 more people, they would not have lost their House seat. So these counts do matter.
Thanks, George. So now we're going to transition a little bit and talk about some Florida-specific things. And, the legislature comes up for 60 days every year. And when it's an election year, they come up in January for regular session. And when it's a non-election year, the session begins the first Tuesday of March. And the legislature is tasked with one thing and one thing only, and that is to pass a balanced budget. And just for perspective, every year there are thousands of bills that are filed, and there's a small percentage of those bills that pass. This year, there were over 3,000 bills that were filed, and only 275 actually made it through the finish line. And then they have to go through the process of making it through the governors or the executive branch through the governor. So the governor will either sign it, allow the bill to become a law without his signature, or veto the bill. The one thing that's very interesting about the budget in Florida is that the governor also has line item veto, which is different than what happens in many other states. So to give us an overview of what happened in this last legislative session as it relates to the budget, we'll ask Joanna to give us a general overview of the budget, and then we'll turn it over to Kevin to talk about the environmental appropriations, and then Sha'Ron will help walk us through the healthcare segment of the budget. So Joanna, the floor is yours.
Thank you, Ron. So last year's budget, to give you all some perspective, that passed in 2020 was the largest budget that Florida had ever seen. It was $93 billion. And when it went to the governor, he ultimately signed into law a $92.2 billion budget with about $1 billion in vetoes, in his line item vetoes. This year, we were able to sine die on time with a budget, which is not something that's been accomplished in several sessions, just because sometimes it takes a little time to get all those details worked out and agreed to amongst the speaker and the president. But we did sine die on time with a $101.5 billion budget, which again sets the precedent of being the largest budget the state has ever seen. And just for some highlights in that overview, you've got $6 billion set aside for reserves for the state. There's $36.3 billion that come from the General Revenue Fund, $2.4 billion from Education Enhancement Trust Fund, and then there's over $62 billion that come from other trust funds that the state utilizes to fund projects. And finally, I'll just note that there's $6.7 billion estimated that we believe we will receive as a state from the federal coronavirus fiscal recovery funds for states. So that's yet to be determined, but we do expect that to come at some point this summer. And one of the other big priorities for the governor that the legislature did fund was a $1,000 bonus payment to first responders that were serving our citizens during this COVID time. And so that totaled $208.4 million for those first responders. Now I'll turn it over to Kevin to highlight the environmental section of the budget, which was a huge priority for all three members in the leadership, the speaker, the president, and the governor. They all really shared similar priorities on that aspect of the budget. So Kevin, it's all yours.
Thank you, Joanna. And Joanna is correct. So this was a session where there was a lot of synergies with the Senate President, the Speaker of the House, and the governor. One of the things that everyone's been aware of since the governor's term is he's prioritized environmental funding, and he's prioritized Florida being a destination state and preserving our environment for that economic impact, and knowing that that correlation is directly tied to each other. So one of the big things that was really exciting about the Florida Leads budget this year was we had some of the consistent important emphasis on restoration for the Everglades. And that is our national treasure here in the state. We saw a significant amount of funding, which was always a priority of the governor, but the legislature was able to come together and support his budget proposal with $850+ million for water quality improvements. If there's any details or questions that anyone would like to have on some of those $850 million, please feel free to ask them. We'll go into details of those. Another item, which was a relatively new item, and we'll talk about the policy a little bit later, but they established the Resilient Florida Grant Program this year. That also is a new restoration and program for local governments to work with the state to address resiliency, both on an infrastructure level to an environmental level. So that was another big accomplishment by the legislature this year. There's also over $100 million funded in Florida Forever. And there was also $125 million funded for petroleum restoration cleanup. A big important aspect of that is due to some of the travel bans during the course of the pandemic, that funding source comes from the gas tax receipts. And due to the lack of travel in the state, significant funding trust funds were not available to the typical restoration programs, but the legislature, through the CARES Act dollars, were able to appropriate additional dollars through the state, and we're able to provide the protections necessary for Florida's drinking water in the state. And then also the legislature were able to fund the state revolving loan program, and that's both for the drinking water and the wastewater. These are federal grants that come to the state that the state government, that Florida will take match dollars here and then turn into low interest loans to utilities, both public and private, to be able to address some of their infrastructure needs in the state. But this year, on an environmental standpoint, even with the challenges of COVID-19, there was an immense amount of funding available for them. And all three leaders, I think, walked away this session believing that they were able to protect Florida and the environment here that makes us stand out in the union. But with that, I'll turn it over to our healthcare, another important budget silo. So to you, Sha'Ron.
Thank you, Kevin. So of the state's $101.5 billion budget, $44.6 billion was allocated to health and human services. And so when you think about that, that's nearly 45% of the budget. That's a very sizable amount. The great thing is that there were very few cuts to the healthcare budget this year, which is different than what was earlier anticipated due to the pandemic. And the reduction in cuts is due largely from monies that have already been discussed, federal dollars that have come into the state. So this year, as in years past, Democrats renewed their push for Medicaid expansion. That gained very little traction. However, it was a major priority for the Speaker to extend the period of Medicaid eligibility for new moms from 60 days to 1 year. Although this was not the expansion of Medicaid that the Democrats were hoping for, it was definitely a win, especially given the fact that Medicaid covers a sizable number of childbirths in Florida. So budget-wise, this translated into about a $240 million spend. $89 million from the state, $151 million in federal dollars. As I mentioned before, the cuts this year were not as deep as earlier anticipated. And so I'll highlight two other notable healthcare related items. There was $131 million in opioid addiction outreach and treatment programs, and also $95.7 million in spend towards the iBudget waiver program, which provides at-home healthcare to persons with disabilities. One of the reasons why that is notable is the amount that was allocated this year was triple the amount that was funded last year. And so, again, we're glad to hear that the cuts were not as deep on the health and human services side of the budget.
Thank you, Sha'Ron. And so we'll go ahead and stay with you and begin with a question for you. So there was a lot of activity this session for the insurance industry. What are some of the key policy changes that passed?
Yes, Ron, there was quite a bit of activity this legislative session for the insurance industry. Over the years, the legislature has tackled a number of insurance issues impacting various lines of insurance. So some years it's been workers' compensation, other years it's been health. This year, the focus was on auto as well as property. And after many years of debating several of the issues that were addressed this session, the legislature acted again. One of the major pieces of legislation was the repeal of the Personal Injury Protection Law, or PIP. This was something that had been before the legislature many times. In 2012, the legislature addressed PIP reform because of increases in insurance rates that were happening as a result of a tremendous amount of fraud. So after looking at this, since that time, there were still issues with PIP. And so the legislature, under Senate Bill 54, decided that motorists would no longer be required to carry personal injury protection. So instead of PIP, the requirement would be to carry bodily injury insurance at $25,000 per person, $50,000 per accident, and $5,000 in medical payment. It's going to be really interesting to see what happens with this bill. This is a bill to continue to watch. There is a major push by industry stakeholders to ask the governor to veto this bill. So again, it's not over. It's something that many of us are watching very closely. In addition to auto insurance, there were reforms that took place on the property insurance side as well. Senate Bill 76 addressed a number of issues that had been before the legislature before and were resolved this year. Just to highlight a couple things from Senate Bill 76. One is it reduced the amount of time for policyholders to file insurance claims to 2 years. Prior to that, if it were a non-hurricane claim, you had 3 years to file an insurance claim, 5 years if it were a hurricane claim. There were other areas of reform related to roofing, contractors, public adjusters, managing general agents, and also reform to insurance-related litigation. Again, two things to highlight in that area. Under the bill, individuals would now be required to provide a notice of intent to litigate to the Florida Department of Financial Services before filing suit against an insurance company. And the legislature also addressed attorney's fees, how attorney's fees are paid in insurance litigation. So these are areas that have been before the legislature time and time again. Oftentimes, if you've followed insurance from a public policy standpoint, it takes many years. And so this year there was a lot of activity and a lot of movement that happened related to insurance.
Thank you, Sha'Ron. And so, Kevin, there were many things that happened this session, but there was focus on sea-level rise legislation. Would you sort of expound on what those changes are?
Yes. So one of the items that we mentioned earlier in the budget was there was a significant priority by the Senate president, who has an agricultural background and understands Florida's agriculture, and also a speaker who has coastal communities and understands the impacts to sea level rise here because of the climate change referenced earlier. And they came together this year and passed novel legislation that had 3 specific bills. The most impactful and the most important substantive bill was Senate Bill 1954. This was entitled the Statewide Flooding and Sea Level Rise Resilience. There's 3 major components of that bill. Those 3 components was it established the Resilient Florida Grant Program, which I mentioned in our budget section. And to kind of give a little bit of explanation of that grant program, this is a program that would be designed to provide grants to counties and municipalities to start identifying resiliency efforts in their communities and start addressing their assessments and also prioritizing projects that would allow them to become more resilient, both for their infrastructure, but also for their community in general. The second component of that bill was it required the Department of Environmental Protection to develop a statewide data set for sea level rise. This data set had certain parameters and requirements set forth on understanding what the impacts would be to critical infrastructure in the state, and also had other requirements to allow them to go into the third portion of the bill, which was a requirement for the Department of Environmental Protection to create a statewide flooding and sea level rise resilience plan. That resilience plan is going to be a 3-year funding plan that would be presented to the legislature on an annual basis to allow them to identify projects of up to $100 million in the state of Florida that would address sea level rise impact and provide further resiliency for our coastal communities. That legislation was also complemented or linked in lobbyist terms with the Resilient Florida Trust Fund, which is a conforming bill that actually established the depository trust fund for the dock stamp distribution that also was addressed by the legislature this year. And specifically, Senate Bill 2512 addressed the dock stamp distribution. For those who don't know the dock stamps are when you buy a home and you provide the documentary stamps to be able to make those purchases. Certain revenues go into many different trust funds to address certain impacts, whether that is a conservation impact to whether that's addressing transportation and road infrastructure. This year, the legislature ended up redistributing the the funds for the dock stamps to go to 3 different trust funds. Those trust funds were the Resilient Florida Trust Fund, which was established in Senate Bill 2514, the Water Sustainability and Accountability Program Trust Fund, which complemented the resiliency efforts passed by the legislature this year, and then also reappropriated certain dollars in the State Housing Trust Fund and Local Government Housing Trust Fund. But those 3 bills, in coordination with each other, all allowed there to be a statewide approach and comprehensive plan moving forward, very similar to the 5-year work plan you see with DOT and the road infrastructure here in the state. We now are going to have that for resiliency in the environment here in Florida. Back to you, Ron.
Thanks, Kevin. And so, Joanna, there were a lot of bills that dealt with expanding broadband in the state of Florida or addressing broadband access into unserved and underserved areas. Would you touch upon the bills that address that, and then what impact does this have on Florida businesses?
Sure, I'd be happy to, Ron. There were a number of bills that were filed at the start of session dealing with the broadband topic. Broadband internet service has become an essential component to all of our daily lives, especially in this year of the pandemic. And there are parts of our state that we have really learned lack access to broadband. So as I mentioned, there were a number of bills that were filed, but there was one that ultimately passed, and it kind of combined the concepts of several of these bills. So that bill was House Bill 1239. It was introduced by Representative Josie Tomkow, and she lives in the Polk County area, and she often remarked that she is a customer who is unserved or underserved. So she knew very intimately how problematic it is to live without broadband in today's world. And area is unserved if there is no retail access to the internet at speeds of at least 10 megabits per second for downloading and 1 megabit per second for uploading. So the bill would address these issues by creating a broadband opportunity grant program administered through the Department of Economic Opportunity. And it will also provide some funding for updating broadband mapping in the state to help us address where these unserved and underserved areas are. The bill also established a promotional period for rates for pole attachments on these broadband facilities on municipal electric poles. And the hope is that with the promotional period and the reduced rates, that you'll see the broadband companies be able to really take advantage of the reduced rate and just deploy more of those resources out into additional areas. You know, having fixed and mobile broadband internet services, providing that access just really is important to employment, to education, entertainment, and healthcare. We know in Florida that our rural areas are served at a rate of 78.6% compared to 98% in our urban areas. And so these communities that lack broadband access can have difficulty attracting new capital investment. And it's hoped that having the grant program, having the additional investment in infrastructure to reach these areas and these customers will result in increased economic activity in these areas of the state. Thanks, Ron.
Thanks, Joanna. And so now we'll turn to the audience questions. And the first question that I'm pulling up is for Senator LeMieux. The governor's budget allocated over $50 million to Visit Florida, which is laudable given the state's prominence as a global tourism destination. Do you expect the state's economic development programs such as EFI to receive similar attention?
Thank you, Ron. That's a great question. Florida has not been as competitive as it should be in funding its state commercial development arm, Enterprise Florida. There is a $5 million appropriation, I believe, for Enterprise Florida. The hope is that we will create some kind of permanent funding for Enterprise Florida. I have the privilege of serving on the Council of 100, which is a group of business leaders that advise the governor. And we've got a task force right now that's being led by Eric Szilagyi and Sid Kitson. And one of the issues that we're focusing on is how to properly fund our efforts to bring businesses to Florida. We are doing great recently with financial firms moving to Florida, but there are still other firms who are not coming to our state, or when we go through a site selection process, we don't win that selection process and decide to go to Nashville or Austin or Atlanta, the Research Triangle in North Carolina. So we have to remain competitive, and $5 million a year, frankly, is not enough money for us to advertise to the rest of the country that Florida is not just a great place to go on vacation, but a great place to do business. We also need to refund some of our particular investment funds that we've had in the state, like the QTI fund, which goes after qualified targeted industries to bring them to the state of Florida. We need to make sure that the process works and that we're not just throwing money at people to stay or come without having some good criteria or procedures in place. But I do believe we've made a lot of progress in having those criteria and procedures set up. So $5 million is a start for EFI, but we need to do a lot more. There's going to be a lot of money that's going to be able to be spent because we're going to get about $3 billion from the federal government, which was kind of written on the back of the budget this year that has not yet been allocated. And that money will get spent by the legislature. So there's a chance to do some really good structural things here in Florida to make us a more competitive state.
Thanks, George. So there's another question that came in that has to do with federal taxes, and you addressed federal taxes as part of the 100-day recap. So with respect to federal tax increases, we're hearing that the cadre of moderate Democrats at most would support a corporate rate increase to 25%. What are you hearing?
Yeah, I've heard similar, that they may not go all the way back up to the high 20s. Those are the negotiations that are going on now. And you have this group of Democrats along with the Susan Collins, Lisa Murkowski's, Mitt Romney's of the world who are willing to work together. And that's what the Senate has always traditionally been, as a place where different senators could break off from leadership and try to craft their own solutions. So I think that would be a lot more palatable to corporations. Certainly not as good as it is currently, but that would be better than the high 20 increase that's being proposed.
Thanks, George. Joanna, any update as to when the cruise industry will restart in Florida?
Gosh, I know I want to know that. I'm ready to book my next cruise. For those of you who may not be familiar, the CDC still has active a no-sail order. And Governor DeSantis, during the session, announced he was going to file suit against the CDC to fight this no-sail order. And, arguing that our state is seeing economic losses and that we are losing out on these tourism dollars to other countries where the tourists are flying there and sailing out instead. So he took action against what he perceived as that economic loss to our state. Just today, the judge who is presiding over those proceedings, it's a federal judge, he has called for mediation between Florida and the CDC on this motion for an injunction in the lawsuit. And so the mediation is supposed to happen no later than June 1st in Tampa. And I know I'm personally hopeful that maybe we'll see some resolution before that date itself, but we'll probably know something soon on that, Ron.
Thanks, Joanna. Senator LeMieux, there's a question that has come in, and the question is, do you agree if President Trump had not underwritten the production of vaccines that we would not be in the shape that we are now in with the vaccine rollout?
Well, thank you, Ron. I think that Operation Warp Speed, which started under President Trump, has been an unbelievable success, and our pharmaceutical companies have done unbelievable things. I've heard some information that it might have been as quickly as 48 hours upon being requested that scientists figured out how to create a vaccine. And then it was building that vaccine, getting it into enough vials, getting the FDA approval. It's really remarkable. You think that the Spanish flu lasted for 3 years, killed 50 million people worldwide 100 years ago when the world was a lot smaller than it is today. So we should be very thankful. Now, what we really need to do is encourage people to get vaccinated. There seems to still be some hesitancy among people. There shouldn't be. The vaccine is far safer than getting COVID. So I want to encourage everyone to get vaccinated. The more people that get vaccinated, the quicker this disease will go away.
Thanks, George. And it's truly a story of American ingenuity and will in terms of the speed at which we are at the point in which we are right now. And the rest is up to all of us to make sure that we get vaccinated so that we can get back to our lives as we knew pre-COVID. So the next question helps us transition into a conversation about the compact. And the question is, will the gaming compact be approved by the House? And so the answer to that is yes. The gaming compact was approved by the House this afternoon. And so for those who may not know, there was a special session that started on Monday, the 17th and ended on today, the 19th, which really took a look at the compact that was entered into by Governor DeSantis and the Seminole Tribe. And the way that process works, the governor has the right and ability to enter into negotiations and for a compact. And in this case, it was with the Seminole Tribe. They've entered into negotiations, completed their negotiations, and came with a compact. And so what ends up happening next is that the legislature then has to ratify it. And so on today, the House finished its work, so it ratified it. The Senate voted it out on yesterday, so it is fully ratified. So high level as to what this compact does. The new compact is expected to generate $2.5 billion in new revenue for Florida over the next 5 years and $6 billion per year through 2030. And so some other key provisions or things that have to happen in order for it to be fully implemented. Since it's already been ratified by the legislature, it now has to be ratified and approved by the U.S. Secretary of Interior. And as we mentioned, the compact has a term of 30 years. So what does this compact do? It permits the tribe to offer craps, roulette, sport betting, and fantasy sports contests, along with currently authorized slots, banked card games, raffles, and drawings. Allows pari-mutuel operators to continue to conduct the designated player games, but they are limited to their current footprint and cannot have any significant expansion. Regarding sports betting, the tribe must contract with at least 3 pari-mutuel operators to conduct sports betting. If they do not, they must pay 2% of the potential revenue to the state. The legislature also passed a few other bills, but one that is notable, they will create a state gaming commission, and its structure would be similar to the Public Service Commission to oversee gaming in the state. And they decoupled most permit holders from having to run live races to be able to operate what used to be called racinos. All right. So with that, George, do you have any comments on the passage of the compact, recognizing that you were involved several years ago in the last compact?
Well, thank you, Ron. It's a historic agreement. It's, like you said, $2.5 billion in the first 5 years, at least $500 million a year. It also is a major expansion of gaming. Not only is it going to allow for sports betting through the Seminole Tribe and also with some pari-mutuels that they contract with, but it's going to allow that to be mobile. So that's a big change in our state. Whether or not this withstands constitutional challenge is a big issue, and watch for the No Casinos group and other groups to file a lawsuit. And the Attorney General of the state of Florida will defend that lawsuit and that's her job, to defend the constitutionality of statutes, and in this case, a compact, which is like a treaty that's been passed by the state of Florida. We passed an amendment in Florida, Amendment 3, that requires the voters to approve any expansion of casino gaming. The exception to that is if it was done by the tribe. So the question is going to be is sports betting that's run by the tribe but allows for a pari-mutuel and or you from the comfort of your home to do sports betting, is that, I shouldn't say sports betting, I should say, well, sports betting is the component, the electronic piece. Is that going to be constitutional? So we'll have to see what that leads to and whether or not this law is upheld in whole or part. Another interesting factor about this is that currently the Seminole Tribe of Florida's main casino, they have 2 big casinos, Tampa and in Miami, or in Hollywood rather, Hollywood, Florida, Broward County. In Hollywood, they're going to be able to build 3 more casinos on that property. So look for like a mini Las Vegas Strip in Hollywood, Florida. You have the Guitar Hotel now, which is pretty iconic that they've built. And if I know Jim Allen, the guy who runs the the Hard Rock enterprise for the casinos. He'll be licensing with, the Venetian and perhaps the Bellagio and MGM and others, and building a little mini strip down here. There also is a provision in that compact that allows for portability. And what that means is that the parimutuels here who have licenses potentially could move those licenses. So there's been a lot of talk about the folks that own the Hollywood, Florida parimutuel moving their license to the Diplomat Hotel on the beach in Hollywood or to the Fontainebleau in Miami. Under the compact, the tribe would have to approve of that. So a lot of interest here and a lot of intrigue, and we'll have to see how it all plays out. But long story short, it's a big expansion of gaming for Florida, and it's going to produce a lot of revenue for the state.
Thanks, George. And we want to thank you for tuning in this afternoon and engaging with us. We certainly appreciate your questions. And so you know how to get in contact with us at gunster.com. You can look up any one of us, and we would love the opportunity to follow up with you on any of the issues that we discussed today, or issues that we haven't discussed but you are interested in. We would love the opportunity to engage with you on that. So I want to thank my colleagues who joined us for this conversation. I know we could spend hours talking about these things, but our time has come to an end. And thank you for your participation this afternoon.